Does technical analysis work? Well, I have been trading stocks and other asset classes since the age of 16. I have been using technical analysis as well as fundamental analysis. In fact, I worked on firm valuation and mergers and acquisitions during my time at McKinsey in 2006 and 2007. If you want to know more about fundamental analysis, please leave a comment below. One has to accept that there are theoretical challenges to the idea that technical analysis can be used to predict share prices. If stock markets exhibit information efficiency, one would assume that all information is reflected in the current share price, PT-1. Looking at past share prices will not convey any additional information. In a similar way, fundamental analysis would not add much value as the current share price reveals fundamental or intrinsic values. So here FT-1 is the fundamental or the intrinsic value, so you can picture the future discounted cash flow. Of course, after all the required adjustments. However, the reality is that mispricing can occur. That is, stocks might be over or undervalued. Apart from these theoretical challenges, empirical evidence suggests that share prices are hard to predict. As covered in a previous video, share prices can be simulated using geometric Brownian motion. So we simply add VLN in front of the share price, and if you wish, you can take the E function on both sides and you enter geometric Brownian motion. If you want to add a drift component, you can also do this accordingly as explained in my previous video. Now it's important to note that the drift component does not suggest that there is an equilibrium condition, in the sense that share prices are forced back to their long-term drift. Let's have a look at some real financial data and give it a go. I downloaded the share price of Tesco from 1988 to the date of recording. I saved the data as a CSV file in the same folder where I keep my Python script, so I don't have to change directory because that's the working directory. I showed in a previous video how to obtain the share price for free using Yahoo Finance, so have a look if you're not familiar with Yahoo Finance. Let's jump into some coding. So first I imported pandas and NumPy. NumPy we will use a bit later. And I load my data into a pandas data frame, which I label df. This is using the read_CSV function in pandas. So I will later focus on the daily closing prices, so that will be our focus for our technical analysis. As you can see, there is an index starting from 0 and counting the observations. So what I want to do is I want to construct a new column, which I call time, where I refer to the index, but I would like to start counting from 1. Because that's sometimes useful if you want to include time trends or you want to refer to this in some operations later. So you see in line 17, I refer to my data frame. I use a new key, which is time, which will be added to the data frame. I use the index, so I use the attribute on my data frame object, which refers to the index, and I add always 1 to it. So that gives me a new variable time, which starts counting from 1. Then I want to set the index to the date variable, because that's a bit nicer to display in a line chart. And finally, I plot in pandas. Of course, you can plot in matplotlib.pyplot, and there are many other ways to visualize your data. So here we are, this is the share price, which refers to the closing price. I use the attribute close here on my data frame object and the plot method. And you see the ups and downs of the Tesco share price. I did another video that uses an API to download data from Yahoo Finance directly. This makes sense if you want to automate your stock screening. In this video, I will now focus on detecting trends. To be more specific, we will use trading signals generated by simple moving averages, or SMA in short. Of course, there are many more advanced methods used in technical analysis. I'm currently working on an online course which will be available on unicorn.com, so watch this space. The simple moving average, SMA, is the most common technical indicator. It is defined as taking the average share price over a certain number of days. Note that in statistics, moving averages are often centered. Hence, future share prices enter the average. This is obviously not meaningful in technical analysis. We need to stick to past share prices because, well, our objective is to predict future share prices. Trading signals are generated when a short-term moving average drops below a long-term moving average. This is a sell sign, which is called sometimes a death cross. If the opposite occurs and a short-term moving average increases above a long-term moving average, investors should buy. This is also called a golden cross. Let's get into coding. As we will use moving averages several times, I suppose it makes sense to specify a function. You don't want to copy-paste the same code over and over again. You could also construct it differently using a class and using the moving average as a method acting on an instance of that particular class. So this is an issue of design. Now, the first thing I did is I specified various arguments. And of course, again, it depends on what you want to do in this function. And there are different ways to approach this problem. So in my case, I decided to refer to df, which is a pandas data frame, actually. Initially, I wanted to have a series, but you will see in a minute that it's actually easier to use a data frame. I use a key. Now this is a key of my data frame. So that refers to a column or a variable of the data frame. So in my case, it would be the daily closing price. So if I refer to df in rectangular brackets key, where key should be a string as specified, it would give me the pandas series of maybe the daily closing price. Then I specify a list of integers, and so these integers are used to construct the moving averages. As you can see in my arguments, I specified here a default using the equal to sign, which refers to the 50 and 200 day moving average. In my case, I changed my mind and I decided that this function returns actually nothing. So you see I specify returns none because I want it to add directly the moving averages into my data frame. Then I run through the list of numbers. You see that in the first for loop, so for num in num underscore list. So initially it might be 50 and then it moves to 200. I construct as a local variable my moving average, which I change of course every time I go through the for loop. So for my first moving average, I start simply by specifying an array that contains only zeros. So this is useful to outline the dimension of my vector or array. And the length of the array refers to my pandas series. So this refers to my data frame and the key. So that's the pandas series, and this of course is using the len function. So basically I look at how many observations I have in my time series, which is the pandas series, and then I specify a NumPy array with all 0 entries. Then I run another for loop, so this is the nested for loop, where I go through an index IDX, where I assign values to my moving average, and these values start with the number. Yeah, so for instance, if I have a 50-day moving average, I need the first 50 days to start calculating it. Yeah, so I start my in range loop at 50. Again, notice Python starts counting from 0, and I run up to the end of my pandas series. Again, this is using the len function. So inside this loop, I reassign my moving average using indexing, so depending on the index position, starting at num, and I calculate the average using the NumPy mean. I go into the pandas series, so df rectangular brackets key. I use the dot operator to have access to the methods. I use ilog because ilog gives me the option to use indexing in a pandas series. I can index and slice just like in a Python list. So here the first position would be my index position minus num. So if I start at num, this would be position 0. So this is the first point of entry in this case, and I go up to the current position of my index. In the first case, it would be from 0 up to num, so the first 50 observations would give the average based on the simple moving average with 50 days. And we do it as many times as needed depending on the number of entries in our num underscore list. Then I construct the name. Here I convert my num, so this is the 50 days, 200 days, or whatever you specify. I convert this into a string using the string function. I add this to moving average underscore, and then I add this to the data frame. Yeah, so I refer to the data frame. In rectangular brackets, I use the new key, which is the local name, and this would be then my moving average. And then finally, I replace here the zeros with missing values, because the first 50 observations I cannot actually calculate this moving average 50 in a reasonable way. So I replace these cases with my missing value. One has to argue that this is maybe not the best way of doing it, because in theory you might have a 0 also somewhere in between. In practice this is virtually impossible. Yeah, so this of course you could also specify differently. So finally I call this function. I refer to my data frame df, and I use as key close, which refers to the daily closing price, and then I plot the closing price and the moving averages. Yeah, where I refer to y, so these are the different time series I want to plot, and then a list of the keys. So let me just run this and see what happens. Okay, so here we have our share price and our long and short-term moving average. We might just maybe zoom in a little bit to see a little bit more what's going on. So for instance, if we look at this picture here, we clearly see that here we have a crossing, creating here a buy signal. And this is followed later by a sell signal where the short-term average goes below the long-term. So the next step is to calculate these signals and label them as buy and sell signals, and later then to calculate all the trades that are possible and find out whether we make a profit if we use this trading rule. We have to take care of two cases which I illustrate before we get our hands dirty again and code. So let this be the long-term moving average and looking at a case A and a case B. Now let's add the short-term moving averages, and they can cut through in two different ways. So in case A, you see that the short term is below the long term initially, and then it is increasing above the long term. So this gives a buy signal here, and this is followed by a sell signal, and so on. Then we have another buy, another sell. So that would in principle be a trading strategy. I buy at this point, I sell later, I buy again, and I sell later. But it's also possible that it starts here with a sell signal, followed by a buy, and another sell, and another buy, and so on. The problem is this first sell signal, if it occurs first, it cannot be executed except you permit short selling. In my example here, I don't permit short selling, so I have to take care of this case and simply ignore the first sell signal if it occurs before the first buy signal. So the logic here is we will construct data objects that record the price of the buy and the sell signal. So at what price should I buy and sell, and also the timing, because I have to know which one comes first. So let's go back into coding. Now there are different ways of doing it. So one could do the trading signals using the numpy there function, which is fine if the conditions are straightforward. In our case, things are maybe a little bit more complicated. So I prefer to use the numpy select function, which needs a list of conditions and an associated list of values. Now let's look at the list of values first. So this is line 75. Again, the code is available on GitHub. The link is down below in the description. If you have any comments, any issues, just leave me a message, please. Now here the values are +1 for a buy signal and -1 for a sell signal. So I include this in this values list. And now I have associated conditions. Now for a buy signal, it has to be the case that at the moment of a buy signal, the short-term moving average, which in our case is the moving average 50, is above the long-term moving average. And, so I use the and symbol here, the previous value has to be below the long-term average. To refer to the previous value, I use the shift method. Yeah, so this is very, very handy, very concise to use in this condition. So this gives my buy signal. For the sell, it's exactly the opposite. I switch the signs. Yeah, so I am right now below the long-term moving average, and before that, using the shift method, I was above or just at the level of the long-term moving average. So I add a new column to my data frame, which I call signal, using the numpy select function, which refers to the conditions and values. So let's have a look at my data frame. So now the moving average 50 and the moving average 200 are added, and then we have a signal being added. You see that moving average 50 starts here at 51 time 51, which is what you would expect. And the 201 starts at 201. Again, it's what you would expect. And now we look at the signal here. For most of the time there is no signal, which is a good sign because you don't want to have too many signals because then it gets expensive. Of course, there is one assumption in this particular video: we don't actually consider transaction costs. So here you see a sell signal popping up as example. So in this case, you see in the previous period, the moving average 50 is above the 200. And then in the next period, it drops below and it continues dropping below. So you trigger here a death cross. So that's a sell signal. Here you see a buy signal. Yeah, so the current value of the short-term moving average is above the long-term. And before that, it was just below. So that's a golden cross. So our code seems to work. The next step is now to collect the buy time and the buy price and the sell time and the sell price. And I do this starting with empty lists, and I build them up step by step. So this is quite a common way to construct such lists. So here I go through the index step by step, starting at 0. So I go through my observations, and then I ask whether the signal is +1 or -1. So is it a buy or is it a sell? If it is a buy at this particular point in time, I append the buy time list and I append the buy price list. And what I add is I add here my time variable. Again, note the time variable, we constructed this before from the index, which starts counting from 1 and simply counts the observations. And we refer here to the daily closing price at the time where we observe a buy signal. We do the same with the sell signals. Yeah, so basically we collect all the timings and the prices of a buy and a sell signal. So if we now look here at our buy signal, we have a buy time starting here at 977, the first buy signal, and so on. And we have in total 26 signals. And then we have here the sell timings, and we open this as well, and you see you might have now a mismatch of these timings. So again, it of course obviously depends. So here, for instance, when you look at it, the first time at 859, so that's a sell time, that's the first time you get a signal. At this point, it's before the first buy, so it cannot be executed. So this first one has to be ignored. Yeah, so we have to be careful here. So it refers to our case B. The second one is different because here we have a buy signal at 977. This is followed by a sell signal at 1086. And again, you have a buy 1188 and then a sell at 1250 and so on. So then it works, our order works. So we have to take care of this. So we do that next. So here again I start a new list which is empty, which is simply my trades. And now I put the trade information into that list. I decided to have tuples for that. So I have a list of tuples. Again, you can of course use something else. The tuple is quite nice because you don't mess up its structure, and I don't want to mess up the structure. So what I do first is I order, of course, my lists. But anyway, they are already ordered. This is the way I construct it. So you have the sell time, you have the buy time, and I look at the minimum sell and minimum buy time. You could do this, of course, differently. You can just look at the first entry point because by construction they are ordered already. But this is just to make sure it's in the right shape. And then I basically go through these cases. Yeah, so the buy signal is followed by a sell signal. So this is actually not our particular case. In this case, the minimum buy time is less than the minimum sell times. In our case, this is not true. We go into the else statement, which means we are in the else statement. We do a pop, which means we kick out the first observation. So it refers to the index position 0. So I ignore the first sell signal. So I pop the time, I pop the price. So that's something which we ignore because we do not permit short selling. And then I'm inside the while loop, so I keep popping these lists until my while loop stops. Yeah, you see here the end statement, and I refer here to the len of the two lists. So if I run out of sells or buys, I stop this process. So that's the idea. Every time you go through this, you kick out sell times and buy times. If there is a match, you kick out both and you would store the information. You see that here, we store the information. So we have as a first entry point our buy price, then our buy time, followed by the sell price and sell time and so on. And I obtain then the list of these trades. Finally, I can calculate a profit. So this is a very nice use of list comprehension. So again, if you're not so familiar, I did actually a video on lists and list comprehension. So I run now through the trades. So for trade in trades, I look at each and every tuple. I refer to position 3, which is number 2 in Python indexing, which is the sell price. So I take the sell price minus the buy price, so I know the profit I made, assuming I trade 1 share, which is fine because we can simplify that problem. And then I use here a formatted string to simply show me the profit. I round it here, I kick out all the decimals. I just want to have the figure for my profit in pounds. So this is what it is. Again, if you have any further comments, just get in touch and we can have a discussion about this. Right, let's run it and let's see whether we make any money using this particular trading rule. Here we go. So first here we get a list of trades. In total we get 26 trades, and we can look at the first ones. The first one here, which is recorded correctly, is a buy. And you see we sell later, we lose some money here. Then we buy again, we sell later, again we lose a bit of money. Then we make money. We buy at 97 and we sell at 126, so that's pretty good, and so on. So we go through these buys and sells. Some of it looks really, really promising, so that looks really good. So if we then add up all these little profits, what's the total profit we make? Actually, it's a loss. We lose 61 pounds. Now, this is disappointing, but frankly, this is usually the outcome when you go through these trading rules, because very frequently they don't really work that well. But it's good fun to do all the work in Python and certainly useful to know about it. What should you do if you want to get into technical analysis? First, in my view, learn more about time series analysis. My online course covers all the basics that you should know about, including trends, non-stationarity, which applies to share prices, and how to model volatility. If you use Data Nerd all capital, you get 50% off. But this is a limited time offer. Late in the course, you see certain trading strategies, including pairs trading, where you actually try to exploit long-term equilibrium conditions, trading a pair of shares. And this is quite often a promising trading strategy. I give you a clear warning. After more than almost 30 years of trading experience, you have to be realistic what you can achieve, and you have to do careful statistical work. Another important thing to note is do not spend silly money on courses developed by finance gurus. Most of these have nothing to do with proper statistics, proper time series analysis. And if you know Python or Starter, you do not need to buy expensive software for technical analysis. You can just do it yourself, as you have seen right now in this video. Moreover, you should get deeper into Python. The main issue with trading is the human component. You get angry, you get frustrated, which leads to expensive mistakes. I suggest automating your decision making and trading using Python. If you want to know more about it, please leave a comment below. Depending on your interests, I will do a few additional videos on that subject matter. Finally, we must test our trading strategies. In my course, I refer to issues like structural breaks. This is important in practice because any trend you might identify might not last very long. You might have a sudden change of direction, and you need to be able to detect these changes. You also need to learn about out-of-sample forecasting. So to test your abilities to predict share prices, we need to select a training and testing period. That means we train our model based on data available up to a certain point in time. And when we try to forecast the remaining period, this is a so-called out-of-sample forecast. Then we will compare our forecast and the actual share price movement. There's a lot more to discuss and learn. Happy data analysis and happy trading. See you in the next one.